Hello, everyone, and welcome to the advanced room here at XM Live. This is a very, very special session. We have a panel discussion. We will talk about the Fed decision that we will have this evening. And I think I have really the best panel participants here possible for an event like that. We have Andrew here with more than 20 years of experience in the markets, with a lot of historical data in his brain. And we have Marcin, who is always very good also on fundamentals. So I'm very, very happy to have you both here in this panel discussion. I will start directly with my first question. And by the way, viewers, if you have questions, please don't hesitate. You can ask as well in the chat, and we will try, of course, everything to answer. The Fed decision today will probably be the decision of the week. Everybody anticipate this event always, and normally we have huge moves after the event. My first question, Marcin, to you is this today a historical event because this is the last rate hike in the cycle, or is this just another decision and many things will come this year?
Well, hello, Gil. Hello, Andrew. Hello, everyone. And I think we are happy to have you as a moderator of this panel. So everybody should be satisfied here. About your question, I think that every Fed meeting has the potential to be historical, but somehow recently those meetings have bigger load, especially if we look at what is happening around, right? So in a sense, of course, every day is in some sense unprecedented, and every event in some sense unprecedented if we talk about current banking problems, current government debt ceiling issues in United States. We've been through those things, but in a different sort of ways. And right now the Fed is in this situation like interest rates are relatively high, given what was the average interest rate in last 10 years, or maybe slightly more. So in that sense, if you look at the bond market, if you look at all those paradigm shifts that we've been seeing in recent years, and very volatile events like pandemic and war and massive QE around the world. So there's been a lot happening, and I wouldn't say that one meeting will be the historical. I think there could be many or several important meetings coming soon, because if you said that this may be the last rate hike in the cycle. Yes, there is such chance, right? Given, of course, what is happening with the bond market, and given what is happening with banks, that could be the last rate hike. Or maybe we could not get it even, right? So I mean, everybody's so sure that we are going to have this rate hike. I would be looking at a possibility of disappointment here, right? So maybe it's very thin, but also very substantial, I would say. And since First Republic problems, and what came after First Republic was sell-off of regional bank shares of regional banks, the Fed might get a little bit more worried, and that could be the last minute call, like okay, maybe let's calm down, and let's see. We haven't seen many pivots like this from the Fed, but that would be really significant if it would happen. And then next meetings, like if you, especially quarterly meetings, like June and September, could be also important. But right now it's hard to predict that, because we don't know what the world will look like in September, of course.
Of course. We have, by the way, already a couple of viewers here. Prajwal is here, Med is here, Gugu is here, and many, many others who are viewing us also during through social media. We are on Telegram, we are on YouTube. I think we are even on other channels, maybe Facebook as well. Welcome everybody, of course. Andrew, Martin is saying there could be a surprise that no interest rate hike will come. Do you believe so as well? Is this a possibility, or the 90% that is priced in, that's what will happen? 90% that will for rate hike.
Hello, revered viewers. Once again, a continuation session we got, special session on FOMC Day. Hello, Gil and Martin. Yes, there is a slight possibility that they wouldn't raise rates. The havoc and the credit crunch was addressed by Powell in the last meeting. So they already addressed the possible crunch, and they said that most of the job of raising rates was done because of the possible credit crunch. And right now, again, we have the situation with regional banks. Always before the Fed meeting, something happening. The big question is, are they going to address this issue? Is Fed going to address this issue or not? If they address and they pause, definitely there will be bullish for markets. But if they just continue their line of being data dependent, looking more into inflation than the current ambience, and that means that the Fed are leaving lots of room of flexibility. And if inflation doesn't go down, why they will be lowering rates? So at the moment, I think, yes, there is a slight possibility they wouldn't raise rate at all. However, knowing Powell, I don't think it's going to happen. So the scenario is raising rates. Is it going to be, you ask Martin, is it going to be the last interest rate increase? For sure, the Fed or the Powell and the crew wouldn't put themselves in the position to be a prisoner of their statement. So they wouldn't tell you if this is the last one or this is not the last one. They cannot put themselves in the position that the market thinks that, okay, they said one thing and then they're going to follow that adamantly, stubbornly. So what if they say, oh, we're not going to go with lower rates, and inflation starts to go up because people say, we know everything about Fed, so let's do something like we want, because we know that the Fed is having its position already. So definitely you wouldn't know exactly what they're going to do. They're going to be something maneuvering. They might be saying data dependent. They might be saying, looking at the trajectory of interest rates, if they continue going down, then we might be going with a pause. But you never ever know exactly what's down the road, and they're not going to tell you that.
So what you're saying actually is that, yes, there will be a raise, but then the forward guidance will be very important. Will they be more hawkish? Will they be more dovish? Based on the data that we are having, I think the Fed still pricing in that at the end of the year, the interest rate will be at 5 point something percent, whereas the market is pricing in below 4.5%. So there is a huge gap what we will have at the end of the year. Do you believe the Fed will pivot toward the market, or do you believe that the Fed tries to bring the market up toward their target?
Yes, you've got the point. The market right now looking at the 4.25% or maybe 4.5% in the end of the year. So actually they expect 2 or 3 interest rate decreases by the end of the year. And I think that this is the place where market might be getting it wrong. That the Fed might be pausing, but is not going to be very dovish, because time is needed to evaluate those data, and unless inflation goes fast down into 3%, 4%, so why not? Maybe they will be following that. But I think market got it wrong at the moment, and that's why on many occasions we were talking that the market might be too optimistic and expecting too much from Fed, and that's already priced in. That's why market is too expensive to buy. Major implication for us is that the market might be too optimistic and it's already too high, so we have to wait for the pullback. And that pullback might be even more pronounced if Fed disappoints market, and it might be happening as well.
Maybe
So
also
yeah.
interesting to add that as of yesterday, markets started pricing some chances for June rate hike, right? So it's interesting that the market may think the Fed will pivot at the end of the year, but at the same time they think that there is some 20% chance, or that was as of yesterday, that in June we will have another hike, right? So in that situation, it's a little bit of course, it's different time horizon, right? But a little bit of schizophrenia. So the market itself doesn't necessarily think it's gonna be the last hike. That there is a chance not gonna be the last hike.
By the way, we have already also viewers from all the social media, and we have here Haseb Abasi, and we are having also FX Max here. So welcome also to the streams. Marcin, what do you think? Who is wrong? Is the Fed wrong or is the market wrong? Where will the gap close based on the data that you have and the experience that you are having at the moment?
Well, so I will now relate to my nickname, and I will say that for me, this situation is like superposition in quantum physics. You know, it's like you don't know what the real position will be until you check it, right? So we have to find out. Actually, we have to get there and find out who's right, especially when we exactly as Andrew said, they will not, first of all, put themselves in a position that they say one thing and has to do it or would have to go against it. And so they are leaving doors open, you know. And if you look at recent interviews, recent speeches of Fed members, FOMC members, they were like they started repeating data dependency of their decisions more. They started highlighting it. This is something that not everyone may remember, but this is getting into Fed's narrative from time to time. You know, especially around uncertain times, or you know, when they think that maybe, you know, it's time to stop or change monetary policy, because so the fact that they are trying to be data depending going forward means that we don't know, because we don't know what the data will be. They don't know because they don't know what the data will be, and that adds to uncertainty. That's uncomfortable for traders, because well, how do you trade when you don't know, right? You want to know. So in that sense, we will have to see. For example, the incoming recession is also sort of superposition. Like you don't know if recession will really come. Some people are saying yes, it's just getting delayed, and some people say no, there will be no recession, or very mild recession. Like we won't feel it that much. So there are also two camps, and we are about to see. So you may think this way: will there be bigger recession? Fed will pivot more. Will there be no recession? Fed will probably not pivot or you know, soften their monetary policy just cosmetically. So I don't, to be honest, I don't know who is right and who is wrong here. That sounds like a good story, right? Like okay, market is saying Fed you are wrong, Fed is saying market you are wrong, but this is actually something that the reality will sort out most likely.
Yes.
Yeah, and also if everybody knows what Fed gonna do, if let's say Fed said, okay, we're not gonna raise rates, we're gonna go lower rates, everybody would start to go on the buying spree, and that would cause
Exactly.
inflation, and then Fed would have to change their opinion, right?
Yeah.
So
Well, with data dependency, it's also like that Fed could actually create an excuse for anything they want to do, right? They would say, okay, this data is important to us, so we want to do this, or they would say, oh, no, different data is important to us, so we will we will do that. So, for example, broad inflation and core inflation. Recently, we've seen broad inflation getting lower in the United States, but core inflation getting higher. And now they can say, okay, we soften monetary policy because of the inflation getting lower, or they may say, no, we stay tight because core inflation is stubborn, right? And so you could get any outcome, and they could justify it.